everybody. Welcome to the stream. Welcome to the close. Coming in before we have the big CPI data reading that particular idea and getting involved in the market over the last 24 hours. We got a gap open, funnily enough, another gap. Let's actually have a look at this gap. So this gap went from below all the way to up here. So you've got basically now another gap that could be filled. We filled the previous one. So that's now, let's say, completed, I guess. And we come into a key resistance straight before the CPI data. And I think this is what's probably got a lot of people, a lot of traders semi-concerned. We knew one thing, and that was there was an obnoxious amount of puts in the system for this week come Friday. Now that we have moved up to a resistance, what do we expect to have happened? I'll ask the community this question. What do you think's probably happened today in terms of a lot of opening trades? What type of trade do you think retail traders were probably doing today? And I'm not talking about just trading the market up. What do you think was happening in the options? We don't know. I'm not 100% sure. I haven't looked at the number, but I would have a guess for the daily recap. There would be something that's gone in here. Hot Potato Trader says puts are closed. And then Finken79 says buckets of calls, lots of calls opening, bullish. Yep, that's right. Butterflies. Oh, yeah. I don't think they're doing that. It's too much of an advanced technique. And Mark Wilkins says crying and drinking in the morning. Okay, fair enough. All right. Well, that's right. Most people probably. Oh, people are saying they're buying puts. Really? High buying in the UVXY. Okay, interesting. Might check that out. So probably most likely opening a bunch of calls, getting a bit bullish on the market again. I'm missing out on the opportunity. It's going to run. It's going to run. So look, we're here. Where are we? We at a key resistance coming into the end of the close. We might move up a little bit more. We've filled the gap. Always ahead of big news, you tend to see a big resistance or a big support being tested. And here's the biggest issue we have. We know there are a few stats, and most of those stats point towards February being down, okay? Only 30% of the time you have a positive February. At this stage, February would be up. Now, we're in the early days in this particular month, but the stats do say that, okay? That's just the reality. The problem we had and why things were looking bullish was because there was so many puts all over the place here. Very hard for the market to actually fall this week because there's just it's a put fest. And I'll show you this based on these charts. I mean, look at this. Whoa. In comparison to this. Now, what I would expect is this strike's probably gone up heavily today. So is this strike. And we now have a little bit of padding to the downside should we want to go and fill that gap from the downside, from the up to the down. So that is that what we've just seen here today where the market's open bullish and gone up pretty heavily will come back down. Now, where was the best trade for the day? Where was the best trade? And I think the answer is probably going to be obviously usually in the Nasdaq. Because you actually almost got the ability to get that full kind of move. You got a big percentage of the move. If you bought it at the lowest point of the day, you got a 1.23%. Not quite filled here, so we might see a little bit more further rallying here at the close. So we've got about 23 minutes till we end up, and I would probably expect us to continue to try to rally here coming into the core CPI data, maybe get a 4,600 on the US 500. I'm not surprised at this. I just don't know whether we can sustain it. And I think that's the big problem. So I'm going to ask the community here, what do you think? What is your plan around this particular bit of data? Let me just put up a poll. I'll just quickly get into the poll because we've filled many ranges, not quite on the Nasdaq. Ahead of course, core CPI. If you want to know what time that's coming out, make sure you always get your economic calendar. It's going to be 8:30 a.m. New York time. And by the way, thank you so much for joining us today. Appreciate everyone out there. Okay, so do you think tomorrow... wait a second. I know I can use yes or no here. Okay, Here we go. I'm going to ask this question. And because it's a yes or no, you just have to answer this way. So here we go. Let's see what everyone thinks. I'll keep the poll up on the right-hand side for me. So I've got that there. So make sure you vote and let's see what everybody else. AB says new bull run. It's happening. Are we trapped between traps, bulls, bears alike? Most likely. The type of market that you're seeing right now could really be that type of thing. So I've been listening to a few fairly large fund managers. There's a lot of split opinions. A lot of people think that growth's going to continue to struggle for a while. That tends to be my kind of philosophy here. And even if we breach this point, I think we do have a trader's year. I mean, this idea of day trading and scalping and all of these types of things has been pretty strong over the last couple of sessions. VIX sitting at around 20 right now, so that's come back right back down to the support. Basically, this is the point where you expect it to kind of be like bearish versus bullish. A lot of people consider this a switch. I feel like with the market, you're always going to be relatively bullish. You've always got to look at the stats. I mean, obviously, I love the 50 exponential on the S&P 500. And if you added some of your long-term investments there, well done. But for now, I think it's still a bit of trading. Now, VIX is sitting on 20, so people will, of course, place bets here based on the CPI data, whether they go bullish on the VIX or bearish for the one-day trade. It's a bit of a gamble, really. You don't know. I would usually say that you would think the VIX would rise, and it can rise. Remember, the VIX can go up even if the data is good and the market goes up for whatever reason. And I'm not sure whether the data being really good or bad is going to how it's going to affect the markets. That's the problem with this situation. It's already kind of like preordained. Regardless of what the data is, I feel like the market's going to do what it feels like doing. Robert Torres says, check out short interest on IWM was 50%. Okay, cool. And Green Thought says, no one knows. CPI alone cannot be the trigger. It's how they will interpret it. Yeah, that's right. So it's going to be really around that. So let's have a quick look at the earnings today. There are some earnings that we've got. Finally, some larger earnings coming out near the close. We've got Disney, got Uber, technology company, I guess. Twilio, technology. It's gone. And then we have a few others. So we've got finally a couple of large companies, particularly the Disney one. And of course, Uber and Twilio. They'll be interesting. And then Thursday before the open, we also have Twitter. Now, that's going to be an interesting one. They're Datadog, Coke, PepsiCo. So Datadog being incredibly strong, had some really great earnings results. So has Cloudflare after the close Thursday. So there's finally, you would think, some of the biggest stocks that may affect this week that are coming out with results. The beat rate so far has been pretty good. So it's not like we've seen a real weakness there. And the fundamentals of the market are not terrible either. IWM here breaking out to a new peak. We've got a problem at 210, but IWM showing that it's lightning bolting towards the bullish side. So it's really now or never for the bears to really try to get involved here in the markets. If they leave it too much longer, you're starting to say, well, we must be bullish, because you get past this high up here and you're kind of snapping a lot of negativity. You're going to new resistances. You're basically saying we've put the base in, and it's harder. This type of, move does happen because we've seen that happen over here on the left-hand side, but it's just harder to exactly see that. So that would be more of this kind of thing. That kind of one. So at the end of Feb, we'd be down at these kind of levels. That would be that scenario. And I don't know if that's going to happen. So I still think day trading is pretty good. Investing at your investable levels for whatever stocks you might want. And obviously, you know, I always like the 50. Most people are saying that yes, it will be a down day tomorrow, so 62%, but still a lot of bulls out there with 38. So interesting facts here. I'll go with the guess of it's probably going to drop back. Okay, so it's probably going to drop back. We'll find out. All right, Tesla wasn't able to do it. Let's go into a couple of stocks here. Let's get past the market. IWM looks pretty good, no doubt, but I'm not going to use that as the main indicator. And gap fills on US 500 and US 100. Gary Saini says, I could be wrong, but it's probable that we bottom tomorrow. Too many puts last week. I think drop tomorrow, rally Friday. However, SPX weekday shows peak, trough, lower, peak. Yeah, well, that's correct. Yes. When's the Disney earnings? Oh, after the hours. I'm not sure exactly what time it's coming out. I haven't looked at that today. Let's quickly check out Tesla. So Tesla gets the resistance of 945. I've been looking for a breach of this level. Haven't got it yet, unfortunately. So we've got here all the rejection candles. And it looks like we're going to create today as a high, a low, an open, and a close. So basically a long leg doji for the close here of Tesla. Tesla trade is a little bit sad, probably looking for that closure above so they can get to the quick ramp of 1,000. Still think it's a very open trade. So if you do usually get big breakouts, it's good. And the story becomes more compelling by the day. I mean, we know that there's a lot of calls at 1,000. We know there's a lot of puts at 850 and anywhere up to 900. So it makes sense for it to be trapped. And there's a bunch of calls at 950 as well. So all of these areas here have, funnily enough, the only safe range for market makers this week is right in here. It's pretty crazy. We got Desi Doc becoming a Diamond Hams member. Thank you so much for joining us. Appreciate that. Thank you very much, Desi Doc. And thank you also to the 640 people joining us right now on the stream. If you do like the stream, please make sure to smash that like. Yeah, so Tesla's doing the coil. Some people are saying it's ping pong. Well, the good thing is we're going to have some decisions probably made over the next 24 hours because this looks like a long leg doji. And if it closes this way, it could be incredibly significant. We'll scroll through a couple of other things. What else are we seeing here? So we've got the US 10-year coming down slightly, though still quite high. And we've got the US 2-year sitting at 1.12% up at 1.358. So it continues to climb here. And the idea of what the Fed's going to have to do kind of starts to reverberate around. I think it's a 99% chance now, according to the market's price, that we have a 0.25 rate hike in March. I'm starting to think it's probably a 0.5. Just makes more sense for the Fed to probably hit it massively. I think the Fed doesn't want to go anywhere near this rate straight away. I think the Fed will normalize back to like a 1.5% to 2%, not necessarily what they say, because I don't think they can do it. And I think the real teller is probably more gov debt than anything else. Normalized rates are going to be lower than last time round. So here in Australia, they think normalized rates 3.5%. I say they're dreaming, 3.5% to 4%. If they got it back to these points, what do you think is going to happen with housing? You'd have a 6% interest rate. What do you think would happen with housing? Then it would get smashed. So that's not going to happen. Like, come on, guys, get rid of that. that's not happening anytime soon. We're not going to a 3.5%, 4%. And I think the Fed's more likely to be targeting this as a new normalized rate. So I think they'll go hard, 0.5%. Probably makes sense. And then we'll see what happens there. Hit it, slam it, see whether you can deal with it, and then go from that. Hot Potato says, I'm leaning to a 0.25, then later increase. Yeah, I'm kind of just leaning towards that big knock it out of the park and show them you mean business, I guess. Let's have a look at some of the favorite stocks that everybody has. Nvidia, we'll go and have a look at this. See, this is the problem with so many of these markets is we knew that we had the base formation. Fantastic. Great trading off this. Great selling. Great trading again if you were day trading and you were watching the turnaround story here. And Nvidia's been just made a new peak. I mean, most of the time when you look at this on a chart, it's hard to go bearish when you're seeing this stuff on the charts. It really is. Like, I'm not necessarily, I'm always bullish on the market, but it is hard to go bearish here. And the only thing you can really say about Nvidia is probably pull out kind of like a downward trend like this and say, okay, well, here we haven't broken through this particular downward trend. Maybe we have some resistance coming up. It's a pretty compelling looking chart, yeah. Goes down to 220, comes back 270, maybe a little bit of problems, trend line down, all those types of things. So certainly an issue here for Nvidia very soon. But it's a fairly compelling base formation. And it goes across a whole bunch of stuff. Let's have a look at some other things here. Let's look at ARC. So ARC's going to the 20 moving average, going to close right on this. So what I'm trying to do here is just figure out where are we, not so much where Nvidia is, because Nvidia is only one stock. It's looking okay, earnings coming up. Maybe there's a bit of buying into that. It's what is going to happen here in terms of the S&P 500. Will it make a new peak? So we've got our troughs, we've got our peak, we've got our high trough. Do we see this kind of higher peak here through the hyper stocks as well? Through all these Cathy Wood stocks, the hyper kind of smaller stocks. And there's so many that have just shown these types of moves. So some other ones that I love, you guys would know I love these particular stocks. Cybersecurity, net already shown the signs of recovery and it's going off in the sun. And same with Zscaler. So we're seeing some very nice movements here. And that's continued on through the last two sessions. So some nice movements, some good percentages. Yeah, it's as a trader, I guess you just always remain day to day. As an investor, you're looking at this and saying, well, hopefully you bought the 50. And if you didn't buy the 50, hopefully you bought the bottom. But I don't think the end is over for people that think they've missed out. I feel like there is probably another dip that's going to come, and it will probably come when we kind of least expect it. Maybe it won't come tomorrow with the CPI. Maybe it'll come in a few weeks' time once all these puts have been flushed out of the system. But I would expect that there is another pullback. So maybe it's not best to FOMO if you don't know what you're doing. And I still think day trading and scalping is going to be one of the better strategies over the next month coming into March. And Snoozer kind of brings up a good point, which is just basically recommends this type of things, just trying to get the general health of the market, see how things are going above the 200 MAs or 50 days, agreed. Roku isn't turning around yet, and as a large component of ARK, along with Tesla, I doubt it breaks that MA. Not today. That's right, Ed. So it's right in that resistance. And Roku is, well, if you look at the actual stock itself, it's turned, but you're right, it hasn't gone through. And I think that's probably what a few people are going to have to do. If you feel like you missed certain trades, there's so many opportunities in the market, and there's so many stocks that while they've moved today are still on base formations. So let's say the market continues to go up and you go, okay, I need to be bullish. Here's a big base. Here's a huge resistance. Roku gets past this 170 kind of area, and all of a sudden it's put in like a double bottom. You could trade that and easily get it into that kind of concept of $200. And there's going to be good trades like this across the board. I mean, look at ARKG. Let's have a look at ARKG here just quickly. Look at this. For anyone that's in Labu or any of these biotechs, they're all sitting on their little resistances. But think about the runway that they have moving forward. So while you might look at the market and you might say, oh, S&P 500, damn it, I missed it, or damn it, whatever happens, there's so much opportunity here and through the back end of the year. And one of the main reasons that's there is this. And this is just the stats of all time. But if we look at the stats of all time, we've got the midterms. That's going to be very probably risky in the markets. We're going to have a lot of up, down, all around. And if we go through the stats of previous, which could very well happen, we might be ending into the last quarter of this year and suddenly looking at maybe a really nice base formation as well after dips and trades and all sorts of things into a really nice, really nice run. It's going up a little bit. Don't necessarily kill the market after they shock the market. Okay. Jeff Abrams says, I'm holding Labu and ArcG. So Labu is certainly a pretty risky kind of position sometimes. Obviously, this is not for the faint-hearted. You can see here it's up 13% today, which looks fantastic. But just remember here that this is a 3 times leveraged ETF. So will the market fall tomorrow? Yes, 63%. No, 36%. Poll comments 371. Thank you so much for that. Is Square confirming base, says Green Thoughts. So well, let's have a look at Square. It's up 10.3%. No, it isn't confirming base yet. Square has a lot of work to do to get the base through. So let's just look at it on an 8-hour time frame. Actually, just 8-hour. I mean 2-hour time frame. And we can look at a few things. This is the first confirmed base. And you would say, okay, cool. It's broken out. It may involve a scaled position after something like this. So some people may scale the position. The good news for Square is, I mean, $100, it's a huge deal for it. You go back, it's a 2018 price. So it's a very, decent price for it. But in terms of getting the bigger pattern through, this is like stage 1. And then the big stage is where it actually gets through 130. You might say, well, that's too far away. I want to trade it now. Well, this is stage 1. Yeah. And you go to a daily and you'd say, okay, well, that's trying to snap maybe part of this downward trend that we've had, this aggressive downward trend we've had here. The 20 moving average, also not something that's really been touching. So which moving average has it been touching on the way down? We've got to ask ourselves that question as well. Maybe it is this one because that's a hanging man gap up. Oh, 20. Yeah, I mean, I think that 4-hour one is pretty compelling. Check that out. Yeah, that's pretty compelling. This is a gap up hanging man that then shorts off. And we're right on the resistance. So maybe another day and you actually end up getting a more significant closure here that also will breach past that downward trend. Remember, that can be partially ignored because it was a gap and then it actually closed as a bearish candle. When I see a moving average get closed above, what I like to see is that is actually a bullish candle. In this case, it was a bearish candle, and then it was like a little weird inside bar day. And then, of course, it got dumped. Interesting. Yeah, I think it's showing some signs. And you've got clear stop losses. And I think that's probably the important thing. You've got to always have risk management in your trades. Interesting. Mahesh says, so 63% say yes. I'd almost say that's pretty coin flippy. I kind of hinted to what I was thinking there. So you've got to remember, I will have biased the room. I think you're probably saying it's a 50-50 towards the Bulls and the Bears, Mahesh. I've got to stop doing that. Problem with Square is the 900-pound gorilla named Apple. Yeah, so Apple being in it as well is not really that great. Tweezer top SPX 15-minute. Okay, let's have a quick look at that. SPX 15-minute. You're going to be saying a little rejection here. Oh, yeah. So first little rejection candle. Interesting. Let's see what happens here. Little rejection candle. Now I'm going to bring up all of the sectors. Let's have a look here at the sectors and how they're performing today. So we'll refresh this chart. Actually, we'll go to daily. This is going to probably tell us maybe a little bit of information about what Wall Street's doing. So TAN's the best today. That's the solar index. Came out very strong and dumped itself off. And other sectors are doing well. Semiconductors, XLC, my little jets doing okay there. And defensive's actually not really being purchased up here. So it's not like it's an overall day of defensive action. It's mostly in the growth stocks and then some of the recovery stocks like jets and stuff that are doing a little better. All right, so there's no real signs there of weakness from Wall Street. Let's have a look at this. This could be a tweezer top here. Cool little find. So tweezers is basically where you have like a little double kind of rejection pin bars next to each other. It's a little bit stronger than just one, of course, because what's showing you is it's showing we've retested the top, then we've sold off. Then we've retested the top, and at the exact same point, a very similar point, we've sold off again. So when you get that follow through, for many people, that's actually a short base trade. So we've got 15 minutes. Well, we'll close this candle here now. So it's about to happen. 1 minute. And then we'll find out how that closes. Let's have a look at the NDX and see whether it has something similar on it. So a little bit of selling here. Oh, yeah, a little bit of selling. New high. Small sell off into the close. Probably just de-risking themselves a little bit. You've got to ask yourself the question, how bad is it really to miss out on this chunk if you're a trader? I would, and then miss out and miss out in figuring out what CPI is going to do. I don't think it's that bad. Breaks past here, pulls back. You potentially take some longs as a trader, because at that point you would be saying, okay, well, it's breached to a new peak, and then I'm now looking towards buys. So the market's closed here, and we'll look at the SPX. Let's see how that actual candle closed. Nope, didn't close. The gap did get filled. No real signs of weakness here into the end of the day. Market is relatively bullish. That means we're not seeing defensive, so market is relatively bullish. And I'll see if I can pull up the put call data for us right now. Now, a lot of people probably get frustrated and say, Tom, why can't you go through a whole bunch of stocks into the close? The problem with the stocks into the close at the moment is that you've already got the stock that you're looking at, I'm sure. And we have to watch the indices the most, because the indices are telling us the keys. That an easy rule of thumb is that if the 20 goes, or if the VIX goes above 20, you should pull to trading, generally trading big blue chips and specific, like things that move the market a lot, and specifically indices become one of the best day trades. Okay, you don't actually have to look out of that. In fact, all your triggers for most of your stocks can be taken from indices, because it becomes a full-on problem with the market when you break through key supports. It becomes more, where's the market right now? A lot of beginner traders don't do this. Look at it's like kind of like a currency trader will look at the dollar index. They'll look at the US dollar and they'll follow it. In this case, we want to be looking at the indices as much as we can be. End phase here. Holy moly. Look at that. So there was a 144 into earnings, and then it blew out and it went up 26%, ended up 12. I saw a few people talking about this one this morning. Let's talk about Google. I just want to mention it because I think that Google has one of the more interesting trades on it. Obviously got the split in a few months, got great earnings, hard to kind of doubt its fundamentals at this price as well. And it filled the gap on the way down after that big hype. Again, what was happening here? Huge amount of buy calls were going in with this idea that it would be the next Nvidia ramp or Apple ramp or Tesla ramp into the split. It's probably a pretty decent opportunity in this particular stock if you're doing your analysis on that. What does everyone think about that one? Do you like Google at this trade? K Kennedy, $5. Hi, Tom. Hope all is well. It certainly is. Could you have a look at ticker MAT, please? And thank you. Yeah, certainly can. This is Mattel. Now, isn't Mattel on earnings right now? I think it's on earnings. Well, it's at resistance coming into earnings. So there it is. Now, once you get your earnings, you get a bit of an idea of the next move. And I think what you're probably looking at here is you're saying, okay, well, is Mattel in some kind of big channel-y Wyckoff kind of, or whatever you want to call it? We'll just go with channel move. And does this set yourself up to moving towards that $27 and a pretty large move for it? Yeah, I would say, look, this is a massive range for it. It's been kind of a struggling company for some time. And then all of a sudden it got massively sugar rushed due to the pandemic. Problem for them as well. And Uber Eats, frankly, no one uses it. But what a beautiful channel. Isn't that beautiful? You can see it just instantly on the charts. Damn, that's been good. Just draw it up for everyone here. Fantastic. Oh my goodness, that's been good. Maybe there's some trades there for people in the future. We'll see what this does in the earnings. So post market 39.98 and Disney sitting at 150 in the post. So Disney came down to kind of like a buyish zone. You can see where I had like a bit of a buyish zone for it. It then gapped even lower, went to 130, and now it's sitting at a 153. So it looks like this earnings announcement is not negative towards Disney. And this has been the story of earnings so far. Outside of Facebook and Netflix, earnings have been a beat rate at 74% or something like that. So that is expectations of the street. The market's actually fundamentally beating them. And then the market's just going, okay, what's your guidance moving forward? Because we think you're going to slow. This is pretty big here, 7.32%. It's not moving the market too much because Disney is not the same behemoth that it used to move before we got all these trillion-dollar companies. But 159 in the close here, that puts you at exactly this resistance, which probably is where, depending on the results, probably where it finds some technical sell-off here after the close. Uber, 40.31. It's kind of floating all over the place. Nice. Audio's cutting out every 2 seconds? Really? Disney boomed. Yeah, Disney's gone up pretty hard. It's at out of resistance at this point. Is everybody else having audio cutouts? Shouldn't be cutting out. I've got fairly good upload here. Apologize if that has been happening. So yeah, Disney's straight into resistance, similar to Amazon, similar to most of these kind of earnings results. When they're good, they go through, and it does all right. All right, thanks very much, chat. Appreciate that. It seems to be fine. Post market must be Uber's out, 42.61. So is that going to put us into the top end of this? Most likely it will. 42.61. Where would we be? So this went just directly up. It would be about 43.57. Okay, so it's two fairly nice results out of these ones. Obviously better than maybe what the street expected. Both have shot up quite a lot. We've got Disney testing the resistance at 8.7% up, which is pretty big for a big company like that. And we've got Uber sitting at 42. So if you've been in Disney and that was your pick for the day, and you thought, oh, trough, peak, high trough, let's go. Well done. Congrats. If you had a call in it, could be a good time to say that was really nice. And the next session, you'll be like, yeah, please CPI hold up so I can sell that beastie off maybe, or whatever you want to do. Yeah, but it is at resistance, and it's kind of similar to an Amazon style scenario from that action. And the other one was Twilio, yeah. So let's have a look at that. Oh, yeah, that's nice. So hyperstocks really are going to like this one. And look at that. The price action was quite crap coming into it too. So Twilio was sitting on its 200 weekly, and it's coming here to 237. Now, you can't necessarily predict that you're always going to be, well, you can always say that markets generally beat. That is the reality of the situation. Markets, we know two things. Markets are generally bullish and markets generally beat. But you've probably seen this year maybe something you're not used to, which is some big misses. So things like Facebook and what happened there, where it dropped significantly. So one of the best plays coming into these is short dating a call. And if you want to take advantage of surprise, and sometimes that can be one of the only ways you can do it, because the problem is if it does miss, especially a hyper growth, is that they can drop 20% in a day as well. But this is a big move here. 243 instantly up into the resistance. You can see previous support, resistance. All these earnings, this is what happens. They go bang straight into the next zone. And that's the fantastic thing. You can almost project, and I'll let you know this as well. This is why I like sometimes playing the call idea, is the call might be valued at some movement. Let's say it costs 2% or 3% or whatever. You can kind of project in general where you would expect markets to go. So say you're here coming into the close and you think there's going to be surprise call or surprise, rate, and they've done well. The most logical conclusion for you is going to be the 20 moving average between here and here. So you can kind of do your calculation that if they beat, where do you think the market will reprice to? And it's going to be somewhere in this range. And therefore, that's a little tip that I sometimes use to figure out whether it's worth doing it. Because the market will stop usually in these ranges. I mean, look at Disney right now. It's floating around this price. And even with this crazed price here on Twilio, I mean, this is sitting at 26.26% in terms of beat rate. I wonder what that's doing to aftermarket for some of these other stocks. Not that they're in the exact same area. Let's have a look here at net. Another 1.78% aftermarket. Okay. Yeah, interesting. So things that haven't done earnings yet, I was just thinking they might be moving up. Anyway, that's huge, but that's what you want. Congrats if you've got this one. Not even 3 to 4%. How much were they, Liet? So sometimes 3 to 4% would be worth it. If they were 10%, then yeah, what are you doing? You can't do it. So you're taking like a Friday call was sitting at more than 3 to 4%. Twitter earnings? I thought Twitter was coming out the next day in the morning. Really? I thought Twitter was tomorrow morning. Thanks very much for sharing the data here. Appreciate that. Moot Talk says, I changed my vote. Market goes up tomorrow. It'll come down to the big bit of news. So futures markets here, they're not okay. So you've just seen earnings, and everybody said, oh, okay, I'm bullish, 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 bullish. Let's now have a look at the US 100 though, and see what it's been doing. So let's get onto that 5-minute chart. So the US 100 not actually being pushed around as much as you would think. US 500 sitting at the same zone. So while you've had 3 returns that have all gone bullish, and one of them's been a mega cap, which is Disney, it's kind of not moving the market. And that's how reliant the market is on the big FANG or the big stocks. When's the Barber earnings? Barber ran quite a lot in the Asian session, actually. I wonder how it held up to the New York session. Not that good. Barber earnings. Is it tomorrow? Don't know why it's not here. Not sure. Don't really follow Barber very much anymore. I think it's just so much other opportunities. How are these earnings going to affect the SPY? Not very much. The SPY is going to do its own thing. As we just said, you've got about, 300 billion market cap that just announced. It moved on average, let's call it 6%, 7%. That's only a very small small amount. That's the whole market cap moving up 7%. In comparison, when Facebook went down, it lost that exact amount. So you actually lost $300 billion in one stock. So you lost all of that market cap. And I think that's something you've got to put it in perspective. RK up to after hours for sure. Okay, yep. It's done it. And Timo says Barber hasn't scheduled yet according to earnings whispers. All right, thank you very much, Timo. They estimated to be around the end of the month. There we go. So I'm not sure why the program here says it was going to come out today, but maybe that was the original idea and they changed it. All right, so thank you so much. 742 people have been here. Let's go through some other markets now. So our general consensus here is that the markets themselves are just at resistance ahead of the CPI data. And regardless of this earnings, it's going to be really more of a discussion of what does Wall Street want to do. And that really is the story here. There was a trade to the upside. Obviously, if you're trading the futures market, you may have taken the breakout. The gap closed to the upside. Just remember, there's now a gap to the downside that's present in most of these market indices. And we now have this gap that hasn't filled. So we filled this one, but we haven't filled this one. So we're at resistance. We've got, let's call it news. When that comes out, we'll find out whether we can break or we bust. And there's no way of predicting that at this stage. If you're always going to be predicting the market, you'd always 67% of the time, you'd be saying, okay, well, I'm bullish. If you were willing to be correct most of the time, that would be probably the argument you would make. But I think that there are enough signs there. Let's move over to the crypto market, have a look at Bitcoin here, 44,636. It's been inside day here. We've got the long leg doji of the previous day, the high, the low, the open, the close. Not much to see here in Bitcoin space. 46,000 is where the big bulls and bears fight it. We certainly reported over here that this was a significant breakout. You can follow us on Twitter, FX Evolution, and also on TradingView. We cover off on that stuff. But this is the fight zone. This is the final fight zone for the crypto gods, and hopefully they can move to the bull side here and get a little bit better. Let's move here to Ethereum, probably the better trade over the next day. From what you're looking at here, you would think we have the chance of moving all the way into the resistance, and the day trade could certainly be there for that. 3,400 looking really strong here on Eth. Nice daily close above the long leg doji, a sign of alts also firing up. We'll find out. Things like DOT being lackluster, KSM's lackluster, Matic coming back, and the rest of the cryptos have been doing okay. Some of the alts haven't done very well though. It's still the BTC ETH train and maybe SHIB. SHIB's been doing all right. What are the metals doing? Yep, so we'll have a look at the metals. Gold continues to plow slightly higher, 1832. The gold trade is actually better versus other currencies, which we always say, if you can, look at gold versus another pair if you've got the opportunity to trade it. The US dollar is still relatively stronger than, say, like something like the Japanese yen, something like that. So we're talking about this yesterday, and that was just a trade that I missed actually. But it was a very nice bottom base. This was the best gold trade recently. Very nice. This particular candle here was a super buy, and then it's breaching through a very key resistance right now. So if you're looking at gold, remember there's gold versus other currencies. There's no reason why you can't trade it versus other currencies. You don't have to trade it versus the USD. Traditionally, most people use like the euro, the pound, and the odd, pretty common. And this one's just really good because of the way the yen's moving, which is the yen is the weakest. And at the moment, everything else is stronger versus the yen. So this is a very good one. We've got Marvin the Martian, Dave saying gold versus yen, bebe. That's right. Etsy recovering, yeah. Everything should be, all the little hyper stocks will be getting a little bit excited, but Etsy's not moving that much. Let's go through some more commodities. Silver continues the bullish movement. We are bullish on this based on the base. Again, versus different currencies, you'll have greater success. Gold and silver looking at nice breakouts here. Oil, I'll remain pretty much neutral on now. I think that we hit our 92. And for me, there's no strong trade here. It's a double base, I guess, coming into the CPI data, but I don't really like either way on oil at this stage. I feel like it's hit the level that we liked, and then we look for the next move. 2 years, as we said, it's still up. Platinum, all these other metals just kind of hovering around. Look at this platinum. It's a wick fest. It's not really the market you want to get into as a technical trader, but we get a breach out. Platinum will have a trade on it as well, because that'll be the first significant close above this 1040 level. So certainly all the metals are improving, which is very, very interesting here. Aftermarkets, US 500 and US 100 are hovering, slight increase, not much, thanks to the others. And I want to have a look at Twilio again. I'm just interested to see whether it's holding that monster bull movement it took. Is holding at 26.4%. It's going to be exciting to see how these hyper stocks react tomorrow. 255 was once a 454 stock. It's pulled back to the December lows. That's cool. Actually done better than that. Nice. Not bad at all, guys. Someone says Soxal is a big semiconductor. Well, isn't Soxal just the 3x leverage? All of the stocks look like this. So someone says, is this going to show us Nvidia's way? Well, this is the thing. It's got trough, it's got peak, it's got higher trough, it's got higher peak. They're all showing these types of turnaround stories. They've got resistances coming up. They're all showing the signs of turnaround stories. But this is just a 3x leveraged ETF. So it's not really helping us with Nvidia. White House warned that tomorrow's inflation data will be high. Oh, there you go. It looks like it must be already kind of out there. Copper had an incredible breakout today. Let's have a look at copper. Yeah, nice. It's a good breakout. Wouldn't say incredible, but certainly coming off the last couple of days, it's been nice. Bullish, 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 though takes out stop losses. Follow through. So metals looking good. Obviously, if the White House, if that's true, has come out and said, hey, we've got high inflation data, that will probably feed through into the metals as well. All right, everyone. Well, we've got, for anyone that's a member of the private community, we've got, as Dave says here, we do have a 9:15 Q&A with the other member of the team, which is obviously my business partner. So he's going to go through the wild and woolly kind of stuff that you have questions for. If you're in that, make sure you join the new time, 9:15 a.m. Australian Eastern Standard Time. And this stock market is, I mean, it's really interesting. Great day trades. I think it continues to be a trader's year here. Don't lose sight of the fact that we probably are going to go into some form of sideways market just due to the fact that we've got this kind of thing going on, which is maybe some weakness months, a little bit of instability coming through in the markets. But we have, if everything plays the rule book like it has in the past, we could have an amazing opportunity coming into the end of the year for sure. Wolfenite, new member. Thank you so much for joining the Stonk Squad. Appreciate that. Thank you very much, Wolfenite. And thank you very much for the 300 likes. And thank you, Monica, for always being a big support. All right. Well, we'll see you tomorrow for another very big day of market action. It's been an exciting after hours. Obviously, Disney, Twilio, Uber. If anyone was in those, congratulations. It seems like you've got the right side of the market. It's been green all day. Everything has been up fairly hard, led by a lot of hyper stocks, which are the most beaten down sector. And the Twilio result is fantastic for people that are in that. So, yeah, really good stuff there. All right, we'll see you soon. I'll make a video a few hours later, so we'll check it out and we'll find out whether tomorrow is the day of reckoning when the Bears get back control or the Bulls win and push this market back up, and it was all over as fast as it started. Catch everybody. Bye for now.